Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Mortgage real estate trusts, or mREITs for short, were one of the hardest hit sector during the high interest rate environment. Higher interest rate increased debt costs, shrink margin, and cut into profitability. The reverse, of course, should happen once the Fed starts to cut interest rates as early as September. Lower debt costs, expanding margins, and improved profitability should help energize depressed stock prices and translate into higher dividend payouts. Investors' optimism about lower interest is already helping propel mREITs higher. The iShares Mortgage Real Estate Capped ETF, traded on New York Stock Exchange under symbol REM, is up 4% year to date, but it's also up 12% over the last 6 months and 10% over the last 3 months. Today's income pick, NexPoint Real Estate Finance Inc., traded on New York Stock Exchange under symbol NREF, is faring a little better. NREF stock is up 8.5% year to date, 25% over the last 6 months, and 18% over the last 3 months. John?
Yeah, thanks, Mo. Yeah, continued strong financial results coupled with a raft of interest rate cuts and ongoing investor optimism actually could help juice NREF stock even further over the coming quarters. As of this recording, NREF is trading at $15.95 per share, and it still needs to climb an additional, I think it's roughly 20%. To get to its May 2022 record high of $18.95 per share.
With that out of the way, can you tell us a little bit about what NexPoint does?
Yeah, NexPoint Real Estate Finance is, you guessed it, an mREIT that is primarily focused on investments in multifamily, single-family rental, self-storage, and hospitality sectors located predominantly in the top 50 metropolitan and statistical areas across the U.S. Now, the company focuses on lending or investing in properties that are stabilized or require limited deferred funding to support leasing or even the ramping up of operations, for which most capital expenditures are for value-added improvements. Now, as of this recording, the company's total portfolio is comprised of 85 investments worth $1.2 billion. Portfolio is geographically diverse with a bias, though, towards the southeast and southwest.
If you like what you see so far, check out incomeinvestors.com. There, we're offering a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, I see it reported, and in management words, another strong quarter.
Yeah, NexPoint reported second quarter net income of $7.5 million or 40 cents per share. It's down slightly from $9.3 million or actually 36 cents per share in the second quarter of 2023. The company reported cash available for distribution of $15 million or 64 cents per share, and that's actually up 24% from $12.2 million or 53 cents per share in the same period last year. Now, looking ahead to the third quarter, NexPoint expects to report earnings available for distribution at the midpoint of 50 cents per share and cash available for distribution of 45 cents per share at the midpoint.
Looking at the dividend, it held its quarterly dividend at 50 cents per share.
Well, cash available for distribution, or CAD, is the amount of cash a REIT has available for dividends. So it's important that a REIT has enough CAD to cover their payout. Now, in the second quarter, NexPoint announced CAD of 64 cents per share. That's more than enough to cover its most recent quarterly dividend of 50 cents per share, or $2 per share on an annual basis, for, as of this recording, a forward annual dividend yield of 12.8%. Now, it's a big dividend yield, but not a total surprise. mREITs and REITs both are legally obligated to distribute at least 90% or more of their taxable earnings back to shareholders as dividends. Now, when the company has a really good quarter, they can also distribute a special or extra dividend. In October 2023, it declared a regular dividend of 50 cents per share and a special dividend of 18.5 cents per share.
John, thank you so much for your insights. NexPoint Real Estate Finance Inc. is a mortgage REIT with a geographically diverse portfolio, which has a weighted average remaining term of 4.8 years. This helps provide income investors with reliable and transparent earnings stream of roughly the next 5 years. Despite challenging conditions in the commercial real estate market, NexPoint was able to generate second quarter cash available for distribution of 64 cents, which easily covers its quarterly distribution of 50 cents per share. Thanks to NexPoint's diverse portfolio and lower interest rates, which will allow the company to refinance its existing debt at better rates and bringing new mortgages. The outlook for this mREIT and its ultra-high yield dividend remains robust. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.